Hey, Polly.
Hey, I hear
What's
you.
up, mate?
I never
Yeah.
saw that. That's pretty cool. You're going to be joining.
Yeah, I'm going to be joining you.
I've got my screen on
I see it.
because I
Yeah,
was just
keep it on. Don't worry about it.
okay. Yeah, I was going to go and cover the spoos, and then I guess you can hit on about the gold market. Although I'd stayed up pretty late last night working on those levels. That 3034 was a great level. I wish I would have jumped in on it. But I thought maybe they could. I meant 3134. I thought maybe they could take it up to this 31. You can see the 3135. I thought they could take it up to, got on a 2 hour chart. I think it is a 3157, but it failed there, and that was a a beautiful area right there. And we've really come under sunder. I'd taken a quick scalp against the point, the volume
Yeah,
mark right here.
the market isn't going to be satisfied that easily. The
I
market is
know.
already pricing in another rate cut in March
Yeah,
18th, so in 15 days.
yeah. I jumped out of it for five, and because I thought they would make a jump right back up here to 3083, and I thought, okay, now I'll get short again and hang on for a while. But man, this market, it's just been, the crazy thing is that as long as you short it, you're getting paid. You know what I mean? You're not put under any duress whatsoever. So,
Yeah, that is very true, and at least we get some volatility.
oh heck yeah, it's been something else. It's been something else, and this Powell just looks like honestly a complete fool, and not really only because of market reaction. It was the worst timing. Either you you pull that rate cut when we're really hitting lows and we're kind of tiring out, like as if we did this morning at 30.25, or you hit it when the market's at its highest and goose it for some extra. He did it in the middle of the range, and so it was just like it was like one of those North Korean failed rocket launches. I mean,
Yeah,
just
plus the market doesn't like panic moves. I mean,
exactly. It's just
it's like, if they're panicking and they can't wait until the 18th of March, you know,
it was just the
what do they
wrong.
know that we don't know?
Yeah, and
You
it
know
was,
what I mean?
and I tell you what, what's his name made a pretty good point, and I thought about it, but then I lost track of that later on. Was Ivan the K? I think it was Ivan the K. No, I think it was FX Macro said, "Hey, Trump's not tweeting about the Fed not doing their job." He goes, "I bet that must mean that there may be a rate cut," and sure enough, there was. Except that it was, like I said, during the market open.
Yeah,
But
that was actually a good point because
yeah,
obviously whoever believes that, they're not communicating with each other. I mean, you have to be a fool.
exactly.
Yeah.
It's just a
By the
big
way, we have a
mess.
question
Yeah,
from
I never see the questions. So if you have any questions, or I don't even know if people
we
are in
have a
right now.
question. Yeah, have a question. We have a question from Kasif, but the webinar hasn't officially started for another four
Exactly.
minutes. So let's wait 4 minutes and then we can start and go through the
Well,
questions,
since the
Kasif.
spoos are the ones that are really running, I'll just start with the spoos, and then
Yeah, but
we
let's
can
wait
go
for
to
the rest
we can go
that
straight to
might
the
want to
gold
join.
market, and then you can talk about gold, and then we can jump back to FX. Although I do have crude oil also. You know that the OPEC is talking about between at least a 600,000 barrel cut. Now Russia's energy minister, I think it was the energy minister, said yesterday they're going to cut. So that's what spiked it up. But then we dip back, and so then OPEC says they're looking for at least a 6,000 barrel.
I think that OPEX is playing the same game that the Fed is trying
Oh
to
yeah,
play.
but at
Do you
least
know
they
what
had
I
better
mean?
sense. I mean,
Yeah,
Russia was smart
game of
when
desperation.
yeah.
But if the economy is about to tank, of course it's going to help contain the downside, but it's still not going to reverse it.
hmm
Natural gas is responding nicely though to the upside
I don't
from
follow
the
that. The only one I follow, like I said, is crude oil. The really primarily nowadays, I mean, I still trade FX, but primarily just trading the spoos and gold. But I haven't done anything with gold in the last. I think last week I did. I caught a little bit, and then I haven't done anything. And I knew I wanted to get out of the way after that. Remember, we all talked about on Friday about everybody raising cash, and I kept saying they don't care, they don't care, they just want cash, they want cash, and that's what gold was, a victim of. But now it's been released from that, and then the Fed gave it the extra rocket booster, and boy, it's on its way.
yeah, almost 4% up on the day. Yeah,
Crazy. I mean, it is. So, but it actually had some pretty good ranges. I mean, from Sunday, I think.
actually,
Mhm.
gold just hit $60 up on the day.
Wow.
Exactly. Yeah,
Yeah,
sixty
we're at
dollars up.
1647. We're actually going to new
Oh
highs
yeah,
at the moment.
$62 now up on the day. It's flying.
Two, kind of, let's see, four. Hold on. Yeah.
That's why you don't short,
Well, yeah,
that
I mean,
kind of a market.
it actually got out of jail. It got the get out of jail card on this thing once all that forced selling was done for people that were stuck, with big losses in their equity positions, may have had margin calls or whatever, and now we've got this run up here in gold. Pretty good run here. Let's see where we are on as far as a fib. Bear with me. Yeah, we've just
Yeah,
taken up to
we've already
61%.
breached both the 61.8% fib and the descending trend
This will
line
be the next
resistance.
key area if we can close above this.
Yeah, I
And
agree with you.
bear with me. I'd like to highlight it,
Yeah, I'm
make it a little bit
100%
thicker.
with you.
Right there, that'll be key, which is well before the 78%, but that is 60, 16,
55,
55.
yeah,
Wow.
yeah.
And I remember trying to short this thing at 1662, and it just wouldn't give it to me at the time. Eventually, up in here, and eventually it did pop up, but I think I was
Also keep in mind that a little bit higher, 1658 or something, is the multi-year closing high,
okay.
because we did spike to 1689, but that was a spike. So the
Here's the
highest
weekly.
close,
There's a
the
weekly right
highest
there.
close we've had since 11 was actually at 1659 or so.
Well, here's a
So
weekly chart. You can see that 1661 is
just look at
big.
it. It's not stopping. Currently at 1647, just not stopping.
48, yeah. Which we can go in over here on the 5-minute chart.
Yeah, so it actually, as I showed today on Face, it back tested the broken symmetrical triangle that was the previous consolidation we broke above. So we back tested that, and boom, we're now flying again.
So I think it's already actually time here with the webinar starting.
Let's go.
And I'll just go in and jump into the SPOOs real quickly. We're going to try and touch on everything. We're filling in today for Blake. Much deserved rest that he needs. He had a pretty good day, by the way. So maybe he's smoking a cigar and taking a much well-deserved rest for all the work he does here in ForexAnalytix, and also in the webinars at Face, and then obviously the daily roundup. So I wanted to go and fill in, and fortunately for me, Steve's here, Steve Vogie. So we're going to be looking. Well, let's go in and focus right now where we are on the SPOOs now. And I'm just going to hit just some quick levels real quick. Is that we did get to that 30.25. You'll see it here, and then we rebounded here right to the VWAP. I took a quick short. Jumped out too quick because I thought that maybe the market would dip and then challenge up to about 30.83, maybe 30.88. But you can see here we're continuing to sell off. So we did go and challenge. We came right here and tagged that VWAP. But we're going to take a look at the 30.25 and the high today, which was at 31.34. It actually was up late last night doing some work on the old charts. And let's go and move into that real quickly. Bear with me. That's on the daily. So here we are on the 2-hour chart, and as you know, Fed cut for 50 basis points. We took off like a banshee, and you can see right there. I had this level picked up from last night, and one of the guys was asking in the chat room, "Hey, is this a good area to be shorting?" I'm thinking this is right after we had the cut. I'm thinking, well, I think we should at least try and get to 31.57 because this great cut is going to look like egg on its face. But sure enough, we couldn't get past the 31.34 and 31.25, which Vogie, Steve mentioned in the chat room, he wanted to go and take a short against. I don't know if it rebounded back to that level. I don't think it got back to that level, but I don't know if he got back short, which was 31.25 is a 50% of this entire range.
No, SPX never actually went to that level because you're looking at ES. ES did, SPX didn't.
Okay. I was talking about, the SPOOs.
Yeah, so unfortunately, it came very close, but I didn't get triggered on my second quarter of my short position. But it's okay. I mean, it might do that during the next few days, and even if it doesn't, I'm going to add on the way down because, as I've said before, I think that this move is going to miserably fail. Now, it is likely that it might take us a little bit higher before it does, but I think that it is extremely unlikely that this market is not going to suffer at least one more sell-off. And I think that the only thing that can actually save this market is like, an immediate de-escalation of the coronavirus issue. If that doesn't happen quite fast, I think that that's going to be the trigger that is going to be pulling the economy back in a recession after, almost 11 years. So we were long overdue for this business cycle to end. Obviously, Trump was hoping that, that could be postponed by next year, but you don't always get what you wish for. So it is what it is.
Well, you can see here where they came down for support. And one of the things I like to do, I mean, everybody has their what they look like. Blake likes to say there's no right or wrong way. I will look at the 30-minute and the 2-hour charts primarily. And we saw with the 2-hour chart, I was up late last night. It kind of paid out for me. I mean, this morning I started out kind of crappy chasing the market with some of the, FOMO in it with some of these negative headlines like the New York City school closing. But the rate cut kind of put me in the right thing, but I probably could have been a lot more aggressive right here. I thought we'd get more bang for the buck around this 31.34. We might move a little bit higher, but that's where the market ran out of gas. But if you look on the 30-minute, you can see here this support. I actually tried to step in and buy this thing, but it ran away from me. I thought, okay, well, I had already came in around 31.34 and picked it up, and I got lucky. I think it was 31, or I got 31.33 anyway. I got a quick 5 handle. I thought, man, I'm crazy trying to pick up a falling knife. But you can see here, I tried to come in, and we took off, but we came back to revisit, and we've seen a very nice rally up in here. And you can see here on the exponential moving averages, which I use, we had generated that buy signal from back yesterday, and obviously the market stayed with the market, continually moving higher. We are now at an area where they're both the 2 moving averages, exponential moving averages, are kissing each other, which would essentially suggest, well, potentially a sell mode. Well, that probably doesn't, that's probably everybody thinks, well, yeah, that's pretty obvious now the way the market is miserably reacting. This was also a great level, and this was some of the work I did last night. Sure, I probably should have been more aggressive, but you can see this zone here, 31.11. The 31.11 I mentioned in the chat room was an area that I thought, but that's before the rate cut. I said, hey, if they can push higher, that's going to be a good key area.
Did you see the Mnuchin comments that just came through? Not ready to hold trading activity over coronavirus. But it's one of those statements that make you wonder, what was he thinking of saying it? I mean, that says a lot, isn't it?
Yeah.
I mean, it means that they've actually discussed it, and that is kind of worrying.
It is from a longer term perspective. It might be, like Steve, as y'all know, Steve holds for big time positions for long periods. I mean, I think caught the freaking top on, I think it was platinum and palladium the other day and killed it. I think it was up 2% in just one day. But me, I'm just a scalper. I just play on the very, very short-term level. So like I said, I was up late last night. 31.11, you can see this is where they rebounded right back to, and they turned around and failed. And sometimes people, for those that are not, don't generally listen, or that are not, if you want to try ForexAnalytix, we do have the European crossover that comes on at 4 a.m. Eastern, and Stelios makes the recording available about 90 minutes before the U.S. Open. But once again, just to touch on that, is that sometimes people ask me, well, why do you put your levels here or there? I like to put them through the bodies because that helps trying to figure out where the volume is, and you can see how that 31.11 worked out perfectly. Same thing here with this 31.35 here, but we are starting to turn lower here, and I think Steve's right, and the 30.30.25 on a very short-term basis was a good area for them as the market was very, very stretched to engage on a long. I tried to step in, but like I said, it kind of took off too fast. And when it did back in, I thought, hey, be careful. What if this market really starts to come unglued? But it already come off quite a bit here. With that, I'm going to go and move into the gold market, and I'll let Steve do the talking here. And then we will go on and get to FX, but hang on one moment. Bear with me. Let me switch on to the gold market and have Steve give his comments, because Steve was telling people, don't be short this market. And here we are in the gold market. And one of the reasons we saw this market fall completely apart last week, and we were talking in the chat room, hey, people want cash, was because of the forced liquidations, or maybe not forced, but they need to liquidate to cover some of those stock market losses, which is, well, at least is the perceived notion. But
yeah, margin calls on one hand, as you mentioned, Paulie, but there is also another explanation for the gold sell-off. It's a Pavlovian response to what the market believes that likely is going to follow if we get the same type of situation we got in 2008, because the market then started discounting deflationary pressures, and deflationary pressures would mean that real rates could actually stabilize, even move a little bit higher, and that that got gold sold off. But in my opinion, and I've said that before, I don't think that during the next recession, if it's happening, if it's beginning now, fine. If not, whenever it starts, which isn't going to be far away, too distant, I don't think we're going to have the same type of situation we had during 2008. Of course, following today's emergency cut, real rates immediately dumped lower, obviously by 50 basis points in the US. So, there is no alternative but for gold to get bid.
Well, and you were mentioning right before we came on there, you mentioned that we were at a key yearly level. Now, me, like I said, all my stuff is short-term oriented. I know that for myself, as I mentioned to you, that and I think you both agreed here, the 1656 is pretty key here. But when you look at it on a on a daily chart here, if we can get a close above, and it's going to be this level right here. We like to go with the bodies. If we can get a close above 1643, this market then has a chance to get up to 1677.
Just look at the little symmetrical triangle that was a consolidation before we moved to that high.
Mm-hmm.
So just draw the lines of that symmetrical triangle, end of January to February. You have it there in your chart.
Oh, okay. End of January. Hold on to February.
Yeah, there is a triangle, that one, yeah. Yeah, that one. No, the lower low.
Oh.
The lower low. Yeah, that one.
Oh,
and then
okay,
you have the resistance trend line as well. Take the top of the wick, the top of that higher wick at the end of January.
Hold on.
For the trend line resistance, yeah. Okay, yeah, that wick's high, yeah.
Mm-hmm.
And then draw the trend line lower for the symmetrical triangle. Yeah, pull the right hand side of the trend line lower. That one, yeah, pull it lower. No. Pull the trend line itself.
Oh, okay, I'm sorry. Right here.
Pull the right hand side of the trend line, of that upper trend line.
Oh, the upper trend line, apologize.
Yeah, just pull that right side lower. Lower, even lower. Lower.
Oh, I see what you're talking about. You're talking about it.
Yeah, that one. You see?
Yeah.
So we came back, we retested that broken triangle, and we exploded from there.
Well, this thing really has, like I said, the Fed let it out. Let me go and move this. Actually, there we go. There we go. Oh my goodness. Yeah, and if we can, I'll tell you what, if we do close, well, this is going to be key today, and we may back off from it just a bit, which is right here.
Yeah, of course. I mean, we have a
1643 right here, but
yeah, we have a $60
if
up
we
there.
close above 1643, this thing's going to zoom real quick to 1677 right here. So, I mean, this thing, basically they let this thing out of jail because, like I said, gold was already doing well, but 2 weeks ago, remember, it was struggling when it made these highs. But once again, like I said, after that forced liquidation, there's no encumbrances or whatever, nothing holding gold back at this point. It really has the opportunity to move higher. And if we see further stock market losses, you're going to see a lot more people moving assets into gold, and that'll probably give it another extra boost.
Above, as long as we are on a daily closing basis,
here's a weekly chart.
Above like 1585, I think we can easily move to the next upside target, which is the 78.6 from the all-time high, which comes at 1733. So,
okay, let's take a look at this. Yeah, I had the 60 which it almost got to it. Let's take a look here.
Yeah, from that high to the lows.
There's the
78.6.
Well, I've got the 78%. 78% from, this is from 2040, but it comes in at 18. Looks like 1848. Right here, from the highs of 2040 all the way down here to the 1150. Now, if you're talking about way back when we went down to, what was it, 850 or something like that?
Oh, those are the futures. Okay, because spot gold actually topped out at 1920.
Okay, the futures I've got here 2040.
Yeah. But spot actually topped out at 1920 or whatever.
Okay, well, I'm going with just the most recent. Bear with me one moment. this most recent significant low right here.
Henrik is definitely not going to be happy with gold for sure, Dave.
Who?
That guy Henrik Zeberg, whatever his last name is, he called last week. That guy actually blocked me on Twitter because he was saying that gold was a bubble that just burst, and they told him, that I respect any technical opinion 100%, but when you're using fundamental thesis like it's a bubble that blew up, I asked him, like, looking around in this environment, the bubble you see is gold. So, he wasn't happy with that, and he blocked me.
And this thing's going to be supported. Yeah, and this thing's going to be very well supported here, because look at that. Look how far we are above the VWAP. VWAP's all the way down to 1629. And if you look at this, the support I'm seeing here would come in around, well, it was a key I mentioned before in the chat room, which is going to be right here at 1638 here, coming across here, right there. And he moves down to here. The market's going to go on and be looking to go on and defend that. You're going to have some moment. There you go. Looking for the market. And then the next junction would be right here at 1632. But it's well above the VWAP. So any dips here, the market's going to be picking up. And think of it this way. If anybody did try and short this thing, they're going to be looking for any dips to go on and try and cover on. So certainly, like I said, yeah,
for sure. The first sell-off, people that got caught off guard, they will just try to get rid of their shorts, at a lower cost. Absolutely.
Yeah, and we'll go on and take a look here also on the crude oil market. Let's take a look here. One moment. Now, Russia was cutting yesterday. At least they said they were cutting yesterday, and then today OPEC said that they were looking to go on and cut, I think it's like 60,000 barrels. Actually, me and Jane were looking at it last night, and I was mentioning to her a key area, which was, I think at the time was 48.34, 48.40, and we were looking for a dip down to 47.92, and that's actually where the bottom barking down, and then we rallied up, but then but let's go and take a look here on the crude oil market, and here we are, and boy, did we really get whacked the other day. Here it is on the weekly chart, and we had really fallen down here. We actually came down here to that 43.45, and boy, we've seen a pretty good strong rally here. I know that you were short crude oil. I don't know if you still are short. Actually, 2 weeks ago, we had closed, I think about the key level was 52.84, and we closed above it. So the market was really cleaning out the shorts at the time, but then of course we saw the market roll over, and then the rest is history. What's your take on crude oil?
And now I think as long as we remain below 49.30, which was that previous consolidation's low, there is no real reason for somebody to try to be long. Of course, yesterday's daily candle on crude was an outside key reversal. So, from a candlestick perspective, it was quite a nice reversal higher yesterday.
There's the daily.
But
oh, yeah, heck yeah, but,
it is quite a nice, a bullish reversal, a key reversal. But given the fact that I still have a short bias for risk, I'm very skeptical about crude. I'm not saying that I would be short, at the lows. And yesterday, actually, at the webinar, I said that, listen, there is no risk reward anymore to be short because, there's nowhere you can put your stop loss that it will make sense. So, if you don't have any positions, I think remaining neutral and waiting for more price action makes sense. Now, if you're still short, I wouldn't completely close off my position. I would just take some profits. And, I think we need to give it a little bit more time because the market here is struggling to find a new equilibrium in between supply getting reduced, but on the other hand, discounting a high probability that demand is going to get reduced even further, since the economy is slowing.
Good point. And today we have the VWAP right now, at least currently at 47, looks like 47.67 with the point of control here at 47.75. And this is a good area right here. So the market on any rallies back is probably going to struggle a bit. But like you said, it's so oversold. And as you said, even OPEC now trying to step in and try to provide what they can to try and put some kind of a floor into this market. But I think they played it, or at least Russia played it a whole hell of a lot better than the Fed played with the rate cut. Before we jump into FX, I'll just go back here with the SPOOs and bear with me. Let me just change screens. So really any moves back in here in the SPOOs back here. We've got the VWAP at 30.7775 and the point of control at 30.82. I actually got short right there. I just jumped out too quick. I thought maybe we'd have one more punch up in here to take us up to 30.88 and then it could roll over. But this market is definitely under some kind of a pressure and looking further out. As we go on and take a look at here on the 30-minute, the key level right here, at least for now, it's actually not the 30.88. Really, as long as we don't get above 30.91, actually, you can see the 30.92. As long as we don't get above 30.92, shorts are A-okay, at least the way I look at it. 30.92 would be actually what I would consider the pivot here. We rallied up here, we challenged it multiple times. As long as we don't get a close above this, and that's a 2-hour chart, a 2-hour close or daily close above this 30.92, shorts are A-okay. I'm going to move into the FX because we have seen some pretty big moves here. Let me switch into that. Finally got FX waking up. And boy, have we seen a pretty good run here with the euro. And let me go on and jump into that real quick and find out what your take is here on the euro.
The euro is attempting actually to break higher. I mean, there is a long-term descending channel. It was trading above it a little bit earlier when we got that spike higher following the 50 base points cut from the Fed. But it has pulled back within the channel again. So bottom line, the channel's trend line resistance passes from 111.50. I think a daily close above 111.50 will lead to a higher squeeze. But until that happens, I think we might see a pullback first towards 110.
Yeah, I'm looking here at this. We actually got 10.95, but you're right. We're a little bit overextended. They have cleaned out many of the shorts here at this point. I think we were looking for, and once again, I like to go with the touches. I'd be looking right here at 10.62 on a bit of a stretch if they do get beyond that. So it's right here, go with the touches, and right there. You see here? Right there, basically 1060 is what I think is if they do fall back, then you're going to find some buyers step in. You can see all the touches.
1060 is one area of support, and 110 exactly. As you see, we had 3 different lows.
Hell of a fall.
Yeah, we have 3 different lows there at 110. 110 is also an area of interest in case if we pull back to that, because we might not, as you said.
And if you don't want to play the SPOOs, one market or one pair that has really reacted to the SPOOs has been the dollar peso. What an unbelievable move we've seen. We actually had a tweezer top from yesterday, and we've gone and pressed the low side.
It was a very nice reversal.
And challenging the pivot at 1923.6. We're actually just above this key pivot that's been so huge. What's your thoughts here on the peso?
Let me show you actually, because even if you look at it from a long-term perspective, the USD-MXN is even more interesting, and I'll show you immediately why. Paul, you can see my screen, right?
No, I don't. Oh, I see your screen. Yeah, I see it now.
Okay, so USD-MXN, let me show you how beautiful that was. First of all, it trapped everybody being short after we broke through this multi-year symmetrical triangles trend line support. And then we squeezed higher, we went back in the triangle, and look where we got rejected from. Again, from these long-term triangles, descending trend line resistance, confluencing with the 78.6% fib from that move lower, and this horizontal support resistance area. So, a great zone for a rejection, and indeed it happened. But, people should keep in mind here, as you very well mentioned, this was a very loaded carry trade for those that were risk on and wanted to play through FX. So if my belief that risk is going to fail again is correct, you should expect that USD-MXN is going to explode higher once again. Now, possible areas of support at 19, you can see there is a horizontal support resistance area here at 19, and the second one is the one we're currently testing actually. So 1925, the 200 daily moving average is passing from here. This trend line support is passing from there, horizontal support resistance area. So I do think that USD-MXN, the closer we get to 19, the better the risk reward is to attempt to catch another move to the upside. which can even take us closer to 21. So that's what I think about USDMXN.
What about the dollar yen? Boy, a lot of people got fooled on that one big time. That were buyers and were looking for much higher prices once we got above
Yeah, the main
110.
reason I'm bearish here is exactly what you mentioned, that the dollar yen first cleared all the stops that were above this multi-year descending trend line resistance.
Mm-hmm.
And once it did that and caught a lot of people trapped in the wrong direction, thinking that, this is a major technical event, and it would have been a major technical event if it confirmed. It got rejected from this ascending channel's trend line resistance, sliced through the 110 breakout area like it wasn't even there. And we're now trading below this channel. So bottom line, I think that the path of least resistance is to the downside at the moment.
Now to wrap things up, what's your take on the dollar CAD? Boy, did we see a pullback the day before, and obviously we have Bank of Canada. They're expecting, actually, the thought is a 50 basis point cut, but looking at dollar CAD, boy, did this thing come apart after taking out some stops. Look at that. Look at that. That actually daily bar, it eclipsed the 2 previous day session.
Very, very true. But on the other hand, this single candlestick can't turn me bearish for one simple reason. Because look where we found support at these huge triangles, trend line resistance, which we broke out from, we back tested it. Also, multiple areas of support resistance were there. That's why this market found it quite tough to actually break through that 133, 133.30 area. And now that it back tested it as support, so far it's holding. So as long as we trade above 133, I think that USD CAD can actually continue to the upside, and as you very well said, the catalyst for an acceleration higher might be the BOC following in the path of the Fed and cutting. So, that might actually lead the pair towards the next upside objective, which in my opinion is the 161.8% extension of this pullback, confluencing with this horizontal support resistance area at 135.60. So as long as we are above 133, I'm targeting 135.60.
And they are looking for a 50 basis point cut, and I did see this come over the Reuters feed today. Was that Trudeau said that they're going to provide any kind of stimulus, or not stimulus, but I think he said, I don't know if we use the word stimulus, but for any businesses that are impacted by the coronavirus. So basically, he's given his, whatever you want to call it, I guess
blessings. Yeah.
Well, there you go. That's the right word. The blessing for the BOC to definitely go in and jump on that 50 basis point cut. And if the BOC doesn't cut 50 basis point after the Fed did, then I'm sure there's going to be a lot of people asking, what the heck's going on? Why
I think it's likely they're going to do so, because now that Fed has led the way, it's much easier for them to just say, we're doing what the biggest central bank is doing. I mean, nothing weird, nothing to see here. So I think it's quite likely they're going to follow suit.
Okay, well, thanks for joining me, and I was glad to have you here. It's the first time you and me have done a webinar together.
Yeah, it was fun. We should do it again.
Yeah, no, for those who are watching, I'm glad to go and have you here. One of the things you may want to go and consider is trying out the ForexAnalytix. It's $1 for 10 days. You have access to all the analysis, macro, fundamental, macro, as well as Elliott
candlestick,
wave,
basic technical analysis, harmonics, Elliott waves,
Exactly. And then also being in the chat room, a lot of great, fantastic traders. I mean, some people like to scalp. My primary thing is scalping, but like I said, many medium-term and short-term traders and longer-term traders. And Amanda's just unbelievable the way she trades. But she is really
Amanda's a killer.
She is. She's something else. But thanks for joining me today. And I'm glad that everybody was able to go in and step in with us for a half an hour. And we will catch y'all tomorrow. Trade safe.
Bye-bye.